FedEx shares. They are still higher in overtime, about 7.5%, though off the very highs after a report where EPS beat, and they announced a spinoff of the freight business. Joining us now is Evercore ISI Senior Managing Director Jonathan Chappell. He's got an outperform rating, $316 price target on the stock. Jonathan, good to have you. So slight miss or in line, depending on how you look at it, on revenue here. Excitement about the spinoff, but that kind of excitement can fade quickly. In the underlying business, are you still just as optimistic after these results?
I wouldn't say just as optimistic. I'd say relatively status quo. You know, there are three things we were looking for in this release. First and foremost was the spin of the LTL business. That's announced. Fantastic. That's why the stock's up. The other things then were obviously the quarterly results themselves and how you build up to those, and then also the full year guide for the rest of their fiscal 25. You know, when you look at it from a big picture point of view, the fiscal year 25 guide came down by $1, but the street was already there. We're at 1945, which is the midpoint of the new lowered estimate. I think it was important for them to right size the expectations for the rest of the year rather than dangle out a big hockey stick for the back half. And you're right about the revenue side. You know, there's only some things you can control. You can control price and you can control costs. FedEx is a cost story. Cannot control the macro. Revenue's light on package disappointment in the U.S. Again, as we expected, we just took our numbers down yesterday. However, the cost side, after a quarter step back in their fiscal first quarter, when the stock was down quite significantly on a bit of a cost hiccup, they're back to on track with their cost initiatives. I think that's the most important takeaway from a fundamental standpoint.
There's a lot of talk out there right now about the U.S. being better positioned than various other economies. FedEx is very much a global company. How exposed is FedEx to policy and geopolitical flare-ups and uncertainty, given that we're likely to have a little bit of that in 2025?
I mean, they're pretty exposed as a global enterprise, as you said. You know, there's four major macro factors that we watch when we build up to FedEx or their peer. Industrial production and retail sales are very U.S.-centric, but then you have China exports and international demand as well. In this particular quarter, the international economy business did a little bit better than we expected, whereas U.S. packages or U.S. ground was a little bit softer. So as it relates to policy and geopolitics, if there's tariff initiation, if there's a closing of the East and Gulf Coast ports associated with labor strife, you know, FedEx can benefit in a very short-term period from getting more air freight associated with bypassing some of those bottlenecks. But generally speaking, the U.S. economy is still the most important, and it's kind of bouncing along a bottom from a demand standpoint, which is why, again, the cost story and the yield story is most important to what FedEx can actually control this year.
When UPS came out with the earnings back in the fall, they basically said that they expected peak shipping season to be a little bit softer. And I realize it's a shorter season this year by a number of days. I'm sure we're all feeling it as we scramble to get everything ready for the holidays. But what is your read-through from the results we've gotten so far from FedEx on peak?
Well, the problem with that, Morgan, is that the fiscal period ended on November 30th. So this peak season and this real compressed peak season is really going to show in December. So unfortunately, we're going to have to see UPS's results in late January on how it played out exactly. Now, I'm sure there was some early buying. Again, it really didn't show up in the packages in the U.S. Side for FedEx, but the UPS results in January will be more representative of exactly how the peak season looked.
Is 2025 going to be the determining year for this turnaround, this restructuring at FedEx under a CEO who's now been at the helm for, 2.5 years?
Yeah, I think it is. I mean, we could argue that 2024 was as well. You know, there's this build up to this $4 billion cost savings. They executed in the first year, $1.8 billion of cost takeout. This year's $2.2 billion, not as a greater total, but it's obviously the less low-hanging fruit. So there's a big execution question, which is, I think, really why the stock took a bit of a pounding after the fiscal first quarter miss. So when to have the cost element of this lay out the upside to the second quarter, again, to kind of right-size the expectations for the rest of the year without changing their cost algorithm. This is strictly kind of a macro reset lower, which the street was already there, the buy side was already there. This execution over the next 6 months will go a long way in determining the success of this new strategy and really bridging to the next part of their strategy, which is a Network 2.0 for fiscal 26 and 27.